Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is, I guess, it's a Wednesday today. Wow, the week is flying. Well, interesting news today. Netflix took an absolute swan dive, and it is unfortunately doing very poorly. I hope that none of you are hurt there. That's always why I do recommend having that stop loss in there. Always on a market stop loss. It can't protect you in the after hours trading, but it does help sometimes. Fortunately, we've pretty much been out of the techs for a while, and boy, it was brutal. I tell you, it looks as if the subscriber revenue is going down for Netflix, and it just doesn't look like a good situation all the way around. And it looks like we're going to be going much lower. We may be going much lower on Netflix. So don't be tempted to buy on the dip, okay? Because Kramer and all these other people may be saying, "Oh, buy on the dip. It's a great thing to do." I wouldn't do it. I just wouldn't do it. I think that it may actually go down further because they gave up 4 years, almost 4 years of growth, and this is what's going to happen. This is why stop losses are so important, because they gave up 4 years basically of growth just really overnight. Well, the title of the show today is how you can be a landlord the easy way. Well, there's some advantages in doing it this way. For once, you don't have to do the management. Now, I actually have both. I actually have rental properties and I do REITs. But REITs are great because you don't have to invest, $100,000 or $200,000 or $300,000. You can just invest a little bit, and you can get some good returns. Right now, this area of the market seems to be doing fairly well. So that's kind of why I thought I would put out some information on the on the REITs today, and kind of give you an idea of some of the good stuff that you might be able to put out. Now, here are the lists basically of the top 5 REITs currently in the market. One of them is Rexford Industrial. That's REXR. The second one is Extra Space, EXR. And then there's Host. Host is Host Marriott, basically. That used to be called that. HST, that's where you can own some of Marriott's properties. Also, there's Apple Hospitality Trust, APLE, and then there is Public Storage, PSA, which everybody's probably seen, the public storage places around with the orange, with the orange paint and everything like that. These are 5 really good, really good REITs that you can kind of put your hands around. And so, I might want to, if you're not, if you're out of the market and you want to get some return, I kind of recommend taking a look at some of these areas. And what we've done also, just for fun, is we've put together a list of actionable REITs that you might be interested in. These are fairly top-rated ones. There's some unusual ones here. And the way you can get access to this, of course, is to go to if you're looking on TikTok, just go to the link, click on that, and there is a button that you can push. If you're on YouTube or LinkedIn or anything like that, just go to www.Dallas Trading Floor, and we have a list of those REITs. You just have to punch the button and first and last name and an email address, and we'll get it right out to you. But and it's free, of course. So it's quite a good little thing. Quite a good little thing. I want to show you a very interesting REIT that I came across. I was screening for REITs, and because I'm looking at REITs, I own currently CubeSmart. I also own Rexxar, REXR, and I want to show you that one. Well, let's zoom on over to the chart on that one. This is the one I've been acquiring. I've been talking about this for a few days. I think I started my position on Monday on this one, and kind of want to show that to everybody out there, just kind of so they can get a look at it. Nice gain here. It's pulled back a little. Well, it's basically even. It was up about 5% today. This is an interesting REIT in that it is primarily in the industrial space. They own warehouses primarily in Los Angeles, and of course, with all the supply chain issues that they're having in Los Angeles. This one is very, very good. Now, I started buying this one back here on the 19th, 4/19. That was my first buy. Then I made a follow-on buy on the 20th. That was yesterday. And I haven't done anything since. Now, it's a little extended. It's moved above that critical pivot point, but it seems like it's getting a lot of love out there. It's got a 100% checklist, and this is the top-rated REIT currently in the market. On the pattern rec, we're doing pretty good there too. We're just 7% above that cup with handle pivot. So, it is a little bit extended here, but you could probably sneak back in. Here's what I would do. I wouldn't probably buy this one at the open tomorrow. I think this is probably going to pull back a little bit, but this one may stabilize because there's just a lot of people that are seeking these higher numbers. Just want to show you the fundamentals on this one. Looking pretty good. Basically, the last quarter, that's the most current quarter that they just reported on, up 41% in terms of the sales, but up 30% in terms of the profit. And that's pretty good for a REIT. REITs typically don't do that well, but this is a great way to own some industrial real estate without having to manage it. So not a bad idea there. Also wanted to show you a kind of another interesting stock here. This is an Argentinian stock. Now, I don't own this one currently, but I am looking to possibly get into it. Basically, what this does is this is a very interesting stock in that it owns Argentinian farmland. Now, why would you be even interested in that? Well, unfortunately, with this war in Ukraine, there's just been a whole lot of interest in companies that can produce lots and lots of grain, and that's definitely the case with this one. This one is listed both on the Buenos Aires exchange and on the New York. So kind of interesting. This is in the NASDAQ. Very interesting stock. Not a terrifically expensive stock. $9.68. It's not a typical buy point on this one, but it is quite interesting in that it's just kind of an interesting stock. Let's go to the live chart on it. It's CRESY. That's the symbol for it on the NASDAQ, and just jump on over there to the live chart here, looking at the daily, and this is kind of interesting. I don't own this one, and normally I wouldn't be a buyer here because it's in the profit taking zone. But here's the thing I am looking at, and it's very interesting to me. We've come up all the way we're just beyond the 940 high here, and then it based properly, and then it exploded off of that. And that was back in the beginning of March, and then it pulled back down basically to the 10-day line, and then it tested the 21 right there, and it looks as if, and I can't tell exactly, but it looks as if we're going to see some more movement up. Look at that relative strength line. It's just kind of just moving up very, very strongly. That's this blue line here. And it pulled back a little bit on Tuesday, and then boom, right back up again. So somebody's accumulating this. Who knows who is, but right now this might be something that you might want to take a look at. And let's look at the technicals here. Basically, we are pretty extended. We're over 11% above that 10-day line, but we possibly could buy it here. Now, here's the thing. When you're buying these stocks that are under $10, that's very, very, it's highly risky. So don't do a full position here. Maybe a quarter or a half position, just kind of speculative. Where I'd put my stop loss would be right at that 21-day line here. So if I did buy this one, I don't know if I'm going to tomorrow, but I would be putting my stop loss here at about 844. That's kind of where I would be going with this if I decide to do it. Now, this is the symbol of this one, CRS. CRESY. Sometimes I get confused here. CRESY. And just a little bit more about it. It basically is up 67.14% this year so far, and closed yesterday at 946. So it looks as if it's basically running about 65% better than the rest of the market. So tremendous in terms of the amount that it's going up. Now, this is not an area that I normally look at, but remember, right now in the stock market, it is the commodities that are making, they're making the best. They're basically doing the best. Talking about doing the best, let's take a look at this small portfolio. Of course, this is a kind of a portfolio that we use just to kind of show you how we're trading. It's one of the portfolios that we have here at Dallas Trading Floor. My largest position currently, believe it or not, is Dollar Tree. DLTR is the symbol there. I've held it for about 13 days. We're up about 5.45%. Not too bad. And we've pushed that stop loss up. Our stop loss is at 167.50, which if we did get stopped out, we would represent about a little over a percent loss. What we're trying to do here is as the stock moves higher, we move the stop loss up right along with it. So if we do get these pullbacks, like the one that we got on Netflix, hopefully we're going to be covered on that. But let's go to the live chart for Dollar Tree. DLTR is the symbol for Dollar Tree, and just kind of checking in with Dollar Tree. And let's look at it's moved up. It's beyond this resistance. Looks like it's moving up after ours. 174.50 is the price here. Today it moved up about 1.29%, which, considering that the NASDAQ was off today, not a bad place to be. So this is kind of what's being favored in the market. There are some retail names that are being favored, but they typically are the discounters. The reason I like Dollar Tree is because it just has a better setup, and its prices are lower than some of the national chains. So that's kind of an interesting thing too. I mean, not necessarily a great place to get into Dollar Tree here, but we'll see how it goes. I'll be pushing the stop loss up, and we'll see how that goes. But let's take a look at the NASDAQ just so that we can kind of check in. Now, the NASDAQ did pull back today, and that is not a good sign, because it does look like, we may have had this run, and hopefully it'll continue, but it doesn't look good with this kind of action that we're seeing on the NASDAQ. Of course, the NASDAQ is where all of the tech stocks pretty much live. Now, of course, the stock that I just showed you with this Argentinian farming company that does grain, that's in the NASDAQ too. So it's not only tech, but it's predominantly tech. And today it came right up to that 40-day line, and it was rejected, and it pulled back. So we definitely have a downward trend in the NASDAQ right now. So that indeed is not, the greatest thing in the world. So it does look like we are pulling lower. The conditions may change. Currently, the market is under pressure. It's still an uptrend, but it's an uptrend under pressure, very, very weak. We may be moving to another downward trend. And if it does, then we want to totally get out of tech, and then we want to start to look to see where in the market there's potential for shorting, because that might be a way to go too. Let me just go over the stocks that I'm currently holding. Of course, we're talking about Dollar Tree, Novo Nordisk. Also, that's a insulin company. Holding that one, seems to be doing okay. Very defensive, very medical. Down a little bit on Shell today, but up overall. I still really like Shell. Let's look at the chart for Shell. This is not my normal kind of stock that I buy, because there's nothing really new and exciting about Shell, but they seem to be chugging right along. So we're still in the buy zone with Shell. So you could still buy here. I bought right at the pivot and then in the buy zone. It's pulled back a little bit, but it is up after hours. This is a very slow moving stock. This is not going to be like a Tesla or anything like that, but it's still moving very nicely, and you definitely could get into it at this point. It's got a pretty good checklist, and I just kind of want to show you that. Yeah, it's an 89 checklist, basically almost as good as you can get. One more and you'd be in there. So currently Shell is buyable at this level. So if you want to get exposure in the market, this one might not be a bad idea. So SHEL is buyable. Yeah. And basically, what do I mean by that? Well, what I mean by that is that it's sort of got a strong checklist. It's in the right place, and the stock is working. So that's one of the main things that you got going on. A little bit of pullback on Lilly. I'm kind of disappointed on that. Expecting a little bit better performance there, but I'm going to hold it for a while. HPQ seems to be turning the corner. I'm hoping. This is also a very kind of boring stock. This is old HP. This is the printer division, and the computer division, and everything like that. Actually, they moved their headquarters to Spring, Texas, which is a Houston suburb. So very interesting there. It seems to be moving pretty good for a tech stock. Again, this is really the only tech stock that I hold right now. It's pretty much just for me, it's pretty much the fertilizer stocks and the oils and some other stuff. I do have a defense stock here, Raytheon. It's up. And then Warrior Met Coal. This is in the top rated area. This is off a little bit today, but I have a feeling that it will come back just based on kind of what I'm seeing in the market. I'm out. I did get stopped out right before the show of Ternium. That was a steel stock, so I'm out of that one. I had a pretty tight stop loss, so not a lot of damage there. ICL is a fertilizer company, down a little bit, but overall they've been doing good. And of course, we go back here. I've done quite well with, and it's not on here. That's Nutrien, which I'm still in. Nutrien is doing fairly well as well. Rexxar Industrial. This is the REIT that I bought on Monday and Tuesday. It's up nicely today, about 5%. CubeSmart also. This is sort of where the market is heading. This is also a REIT. It seems to be doing well. Murphy Oil seems to be doing well as well. And then another one that I have been in, and I do like this one, is called America Homes for Rent, and that's up as well. So kind of a lot of different things, but really not very oriented towards the tech, just really oriented towards just oriented away from the tech, more towards the some of the REITs, some of the more defensive names in medical and the oils. I mean, that's really kind of where it is. If you are interested in taking a look at the REITs, we have this interesting list. It's easy to get. All you have to do is go to https://bit.ly/DTF0124. Now, if you missed this one, it's easy. You just go over to the Dallas Trading. Just go to www.dallastradingfloor. You'll see the button for it. Easy to get. Also, if you're on TikTok, just go to my profile, click on the link, and you'll be taken right over to that page, so you can take a look at that at the list there. So it's a good little list. And without further ado, let's get into some of the slides. Thank you very much. Appreciate you waiting. I have a position at 720. Should I hold or keep? Oh, interesting. Cut losses. Okay, Altria. Oh, Altria. Is this Philip Morris? Let me see if I think that's right. I think it's PM is the symbol. Let me check here quick. No, it's Philip Morris. Let me see if I can get. Let me see if I can get a symbol for you. Altrian, ATER. And all I'm doing is I can't remember offhand what the symbol is, so I am looking it up right now. Interesting, LGR. Okay, so it's ATER is the symbol for Altrian. So let's see if I can put that up here. ALTR. Okay. Altair Engineering. The Altair, this, I guess, is what you're talking about. Altair Engineering enterprise class software. You're really, unfortunately, Jasif Patel, you're really in the wrong area of the market. I mean, I don't mean to, I'm not trying to scold you or anything like that, but really, this is not the area of the market that you want to be in. Computer enterprise software design is a very bad category right now. It's 179 out of 193. So this is not the part of the market that you want to be in. So I would not recommend looking at anything right now in this area just because it is underperforming. So, this is not the right area of the market right now. because the capital flows in and out. But right now, this is not the area of the market you want to be in. You don't want to be in the computer software enterprise area. The reason you don't want to be here is because the money is flowing out. And you can tell that is the case because you can see this downward trend. Now, here's something that you'll learn probably with chart reading. One of the things that I never like to buy any stock that's below that line. That is the 200-day moving average. And right now, it's below the 200-day moving average. This stock is setting up, believe it or not, to possibly go lower. So I'm not saying this is a short candidate yet, but it has the death cross on it. This is where the 50-day move is below the 200-day. This connotes weakness here. So this is a very weak stock. You don't want to be in this part of the market. I would get out of this part of the market. Go to where the strength is. You want to go to where the strength is in the market. Now, one of the things that I have shown to a lot of people is where the strength is in the market. So let me see if I can pull up the heat map. And this is a good little thing here. Let me see if I can put this out there. So let's go to the heat map. And let's pull this up. I'll just take a second. I kind of want to show you why you shouldn't be looking in the area you're looking. Computer software design is not doing very, very well. It's just not doing very, very well. So we want to be in an area of the market that is definitely doing better. So right now, this is definitely not the area that you want to look at. So what we're going to do is going to show you where in the market. It's not enough to just say, hey, you shouldn't be in that part of the market. But what I'm trying to do here is show you where in the market you should be, what kind of stocks that you should be looking at in what kind of area. Now, these are the top 10 groups currently in the market. If you notice, the first two are energy. Then there's agricultural. This is where I have a company called Nutrien. That's I have a holding there. Notice oil and gas, media periodicals. There's only 2 stocks in this one. Notice how that's where the strength is in this market. So we don't want to be, where you've been used to buying has been in the techs, and we all like the techs, but right now the techs are not doing very, very well, as you can see. I mean, Netflix is indicative of kind of what is happening in the techs. There's a lot of weakness there. So this is not where we don't want to be in the market. So this is where we want to be, like energy, coal, and where we don't want to be. As you can see, I'm rolling down. You notice how it's turning red. You'll notice that all of these computer things here, computer software, enterprise, desktop, educational media, they're all red. And that means that money is flowing out of this area. So we want to look to stocks that, we might want to do, maybe put a toe in the water here, but we mostly want to be in those commodity stocks because those are the ones that are doing the best. So that's what I'm trying to present here. Now, one of the ones that is kind of early, a group that is moving up and it's kind of early, and that is the REIT area. And that's why I talk a little bit about it, because we're starting to see movement away from some of the more traditional stocks into REITs, real estate investment trusts, and that kind of thing, because they do pay dividends. So, but right now, if we're looking for those single stocks, we want to be in those energy areas, oil and gas. That's where we want to be. As long as the price of oil is above about $65 to $70 a barrel, we're going to see a lot of action in that area. So that's kind of my take on it. All right, let's take a look at TENB for Juan. Thank you, Juan. Appreciate it. Let's see if I can get that for you. Okay. And that is, takes a second for it to refresh from that other one that we did. TENB is the symbol. And there we go. No. Oh, that's Alter. No, that's okay. That's Tenable Holdings. And that's cybersecurity platform for the Americas. Okay. This one actually is going up. So it sort of is bucking the trend. But here's the thing. I really think that this, software security is the one area in tech that is doing well. And of course, the leader is Fortinet. FTNT is the leader in this one. But this isn't bad. I mean, this isn't bad. I'm not currently in anything in this area. Why? Because, well, quite frankly, because I like to look at stocks that I have a better chance on. So I want to go where the money's going in this one. The question is, what can you do with this stock? It's got a very nice relative strength at 94. That's very strong. Checklist is good. 78. Pattern recognition is good. Now it's basically just about 6% above the pivot, so you could buy it here, but it's very very sloppy in terms of its chart. It is moving up, and there is this consolidation here, but it's a third stage consolidation. So yes, I mean, you definitely could buy this here. It looks as if they've had some good earnings. The earnings have gone up, but what I'm a little bit concerned with here, this is in the fundamentals, is the fact that we do have some negative earnings here. We've got positive sales going, which is very very good, but we've got some negative earnings coming in here. So here's what I would do with this one. I would probably pass on this one, just because I think that they're just better merchandise out there right now. So I would just I would pass on this one. Just because, not because the setup is not that bad. It's a good setup, but I just don't think it has the it's not in the right area of the market. We want to be concerned by being in the right area of the market. That's so important. All right, question on Tesla earnings. They beat everything. Bullish? Well, I normally would be. But I tell you what, I have been very circumspect with Tesla. It's broken my heart a few times. I'll be honest with you there. It just hasn't gone the right way for my thinking. It's up after hours, and it's above 1,000. That seems to be the floor. It's up, it's up about 4%, after hours. But you know what? I'm still waiting. I still want to see a confirmation. I'm really going to wait this time, not jump in. I'm going to wait until we move up past this area here, 1152. I want to see it hold above this area before I'm getting excited, because it seems like we're in a trading range, from about 1,000 to about 1,200. And I'm really not sure that, it's not going to pull back again. So I want to see it cross above this 1152 and hold this. It was a great earnings report. It was a great earnings report, and after hours, it's just on fire. It had pulled back all the way to 977, and then it's up. But these are very binary events. I'm a little bit concerned. So I didn't have any spread trades or anything on it this time. I just want to see it to hold above 11. I want to see it hold above 1152, and if it does, then I'm more interested. But right now, I just can't be as interested. All right. Hey, Jim, I bought a Tesla spread today, expiring on the 20th. Should I cut the loss or hold it? Because I have some time. You should cut this loss immediately, Lisa. I'm sorry. You should cut this loss. You cut your loss immediately on this one. I think that it probably is going to stay above. It's just the puts are going to. Yeah, I think you should cut it, because at least then you'll get back some of your time premium on this one. So I would cut losses here, Lisa. I think that's the way to go. Right now. So my advice for what it's worth is cut your losses. And I would do that, and then we can find another thing to do here, but cut your losses. You still have some time premium. I would cut my losses very quickly on this one, because you don't want to lose any more of it. It may move higher. It's just really tough. It's in that trading range, and it's just a tough way to go. Here's a stock that is a REIT. This is Crown Castle International, and this is a question from Sam. Please, I had some shares that didn't know today was an earning day. Any chances of a recover because of being in a good sector? Absolutely, there is. But I don't know what's happening with CCI, and I put it out there that it was a REIT, and it definitely is. This is one of the things about REITs that you have to be careful on. Here's the thing, and this is tough. You always have to check. Even sometimes I don't do this. You always have to check those earnings. I don't like to hold through earnings because of this. I don't know exactly what happened with Crown Castle. It's a good company, but you'll notice and this is very, very strange. Somebody big sold. I don't know what's going on here. We went up to 197. We had earnings, and now after hours we're up at 198. So go figure. Go figure. I mean, somebody big dumped them out, and momentarily we were looking bad. So they did have something on a loss, but it does look like, at least from what I'm seeing on my charts with after hours, that we closed basically above where we closed. We're above where we closed. So it looks as if you're okay, and you can hold. You can continue to hold. I think somebody big came in there and they sold, and it's really tough when it's thin. The thing about Crown Castle is not a thin issue. It trades over 1 million shares a day. So something big happened. Who knows? But at least in the after hours, it's at 198. So you're pretty good here. I would hold it. I wouldn't get excited and sell it in the after hours. I don't like selling in the after hours because the market gets thin. So I just think you should hold. I would hold this one, Sam, and see what's kind of coming. It's a good, it's in a good sector. So, and it does have a good return. So I don't quite know exactly what's going on at this moment with Crown Castle, but it looks as if it's recovered. So I looked at it earlier and it was horrible. It had dropped something like almost 10%, not quite, I guess 5%, and now it seems to have come back. So I don't know. I'll have to find out more tomorrow. But I'd hold this one, and thank you for that. Thank you for that very, very much. All right, this is Student. Thank you, Student. TGT missed Costco badly. Yeah. Well, the retail sector is really tough. Here's the thing. With retail, you have to be extremely careful buying through earnings. It's just one of those things. Retail is just like that. It sometimes just is terrible. Now you're looking at two good stocks: Kroger, KR, and Target. Let's look at Kroger first. Kroger is one of the best managed grocery chains there is. It really is. They have, if you look at their monthly chart, look, it just, and this is a very tough business. All the way back here to 2002, this has been a successful company. And look, it's at its highest high. So that in and of itself is not a bad, that is in and of itself is not a bad thing. Will I hold it here? I'm not really a buyer in the regular retail. Now I do have one retail stock. It is Dollar Tree. That's the only one I have currently. But the pattern rec looks good. It's but it is extended 15% above the pivot. So I wouldn't initiate a new position here with Kroger. It's a good stock. It's doing well, but it's just not viable right now. So I wouldn't be buying this. If I had profits on this one, I would consider taking them. Now, will this find support at the 21-day line? Most likely. It's most likely going to find support here because 1, 2, 3 days in a row, we've seen some support there. So it looks like it may bounce and go higher. But, I don't know. It just depends on where you bought it. If you're in it, I would not initiate a new position in Costco today. I just wouldn't. Let's look. In Kroger. Let's look at Costco because I did have Costco. I did sell it. I did take profits on cost, and I guess they seem to be doing good in the after hours. It seems as if Costco is doing pretty good in the after hours. Let's see if they reported today. I'm just looking. It's on the 26th. They're reporting on the 26th. So Costco, again, I wouldn't probably be a buyer here. I bought a full position at 459. I wrote it up and then I sold it. So I was in Costco, and it's pretty good. I probably should have stayed in Costco. Basically, I sold on the pullback right here. That's where I sold. It went up and then boom, I pushed whenever I get these gap ups like this, I'm pushing my stop loss up basically. That's what I'm doing. Whenever I see a stock like this and then, it zooms up like this, I'm pushing my stop loss up there, and usually that will be sufficient because when it pulls back, you get something there. All right, let's look at Target. That's sort of the competitor for Costco. And Target is looking actually very good. I'm not in Target. Now, here's the thing about Target. It's moved above the 200-day line. That's very good. It's got a strong relative strength. Look at this relative strength line. That's strong. And it looks as if the 50-day line is starting to move above the 200. It's starting to move in the right direction. This was a death cross here, so that was not good. Here's the thing with Target. I probably would not be in Target. Now, the only retail stock I have currently, and I want to show you this one, is Dollar General. Dollar Tree, excuse me, DLTR. I get Dollar General and Dollar Tree confused. Now, look at how this chart is different than the Target chart. You notice how instead of with Target, let's go back to Target, TGT. You notice how with Target, the 40-day line drops below that. It drops below that 200-day line. Now let's go to Dollar Tree in the same industry. That's the retail industry. Notice how with Dollar Tree, the 40-day line moves above this key. It moves above that 200-day line. So this is getting stronger. Whereas Target is recovering, but it's not as strong as Dollar Tree. You can see that just based on those lines. That is the case. So that's kind of what that's kind of the long and the short. Kind of long and the short of it. But remember, if you have losses, cut those losses as quickly as you can because they build up, and it's amazing how much you can lose if you're not careful with that with that stop loss. I always have 7% as the maximum when I try to, and I don't always get it right on that, but you don't want to lose more than about 7% of your capital, anything that you're doing. Is it possible Bitcoin is going up? Sir, please. Well, let's take a look. Here's what I use. Here's how I kind of look to see what's happening in the Bitcoin world. I use something called the GBTC, which is the Grayscale Bitcoin Trust, which holds 4% of the world's holds 4% of the world's Bitcoin in a trust. So this is a proxy that I use kind of to look at what's happening in the world of Bitcoin. Unfortunately, what I'm seeing with the Grayscale Bitcoin Trust, the proxy that I use for Bitcoin, is I'm seeing a lot of weakness, unfortunately, at least for right now. We're down below the 200-day line, and we're in a downward trend. Now, we did have a little bit of a movement up here about mid-March, but it fizzled and we were pulled back again. So right now, Bitcoin is in a downward trend, at least for right now. Now, does that mean that Bitcoin is going to go to zero or anything like that? No, that's not at all. It just means in the short term, I think Bitcoin is probably moving lower. That's my take on it. That's my take on it. Should I sell accidental petroleum? I've never heard of that. Oh, Occidental Petroleum. Accidental. That's pretty good. Let's look at Oxy. And of course, Warren Buffett took a huge stake in this. I don't know if that's good or that's bad, but at least he views it as undervalued. I think the main reason he did this is because back when they had their former CEO and the price went to zero, and that was, believe it or not, that was under the Trump administration. It seems like it's an age ago. Remember, when you couldn't give away oil, it was unbelievable. But all it takes is the Keystone Pipeline canceling that and a few other things, and we've got $7 oil in California. It's so dishonest. But anyways, Occidental Petroleum is still looking very, very good. I've been out of it. I did it pulled back. I did do a little profit taking, and I haven't been back in, but If it can move above about 63, and currently it's at 61, then I think that, we might be able to get back into Occidental. I mean, it is in a strong sector. I mean, any way you look at it. Now, the problem is right now it is extended. It's 72% above the pivot. So it's very, very extended right now. So that's part of the problem. But it does have a strong checklist. The question is, can you get back in here? Well, if you're going to do it, you have to do it off of one of these reversal lines. And the best bet probably would be buying it off the 10-day line. And it is only 3% above the 10-day line. So you could start a position here. Believe it or not, you could start a position. One of the things I do like about Occidental Petroleum is it's in the E&P group. This is the number 4 group right now in the market. And this is why it's so good. You just improve your chances so much by buying in a strong area, by buying in a strong area of the market. If we look back, back at the heat map here, this is the number 4 group. 1, 2, 3, 4. This is the Oil and Gas International, and as you can see, boy, this is a good looking group. We go out here and you can see it's just getting better. And then this is as of Monday, this was the number 4 group in the market. So Occidental is in that group. And so that's why, we can look at buying in this group, because that's where the strength is. We always want to go where the strength is, because remember, we're following along some of the very, very strongest groups. So that's what we want to do with that. All right, let's go to the next question. Thank you so very much. Bull call. Which is kind of spread best? Good question, Tony. Thank you for that. Bull call, calendar, bear put. What kind of spread is the best? Well, it just depends on what the situation is. I typically like if the stock is declining, obviously we want to do like a bear put spread. I think is very good in that situation. It just depends on what you're trying to accomplish. If the stock is moving up, if the stock is moving down, what part of the market it's in. So that's a good question, and I probably need to put out some videos on this. But that's a good question, and it just depends. You always want to be in the bullish trades if you think the market is moving higher for the stock, and in the bearish trades, obviously, if it's moving lower. Now, if you think it's going to move sideways, and that happens a lot, you want to use iron condors, and so there's a lot of good discussion on that that we could do. All right, let's look at Gogol. This is Golden Ocean, GOGL, and I'm going to pull it back here to Golden Ocean Shipping, and there we go. This is from Troy. Thanks, and I hope everything's nice up there in Canada. Golden Ocean is a little bit extended, but I still like this area. This is a top area known as 13 out of 197, so we're definitely in the top 20 areas in the market. So I like that. Google is probably one of the better. Gogol is probably one of the better stocks in the area. Would I buy it here? Probably not. Why? Because it's extended at over the $10.05 pivot. That would be the proper entry. But if I had it here, I would not sell it. What I would do is I would push my stop loss up on this one, basically to the 21-day line, or about 1243 or 1240, depending on how you want to do it. That's where I would do. I'd be setting my stop loss if I own this one right here, because this line is going to be, if it moves and stays, as long as it stays above that 21-day line, it's probably going to go higher. If it violates and it goes down, then it's probably going to go down just like it did here, going down through the 21-day line and then down to the 50-day line, getting support. So what I would do is I would put my stop loss right about there. That's where I would be stopping it out. And in this case, if you did that at the 21-day line, that would be right at 1243 for Golden Ocean. So thank you for that. All right. Let's see. Interesting. Okay. So basically, we run through all of those symbols as many as we can. I will be back if you want to get a list of those great REIT stocks that I've been putting out there. Oh, one stock that I did want to kind of point out. This is really interesting. I have not bought this stock yet, but I'm really interested in it. This is an Argentinian stock, of all things, and I want to show this to you. And basically, what it is this interesting Argentinian stock in the with the war in the Ukraine. This company produces an awful lot of wheat. It's been going up like crazy. It's a REIT, and I want to kind of show you that it's a REIT, and it is doing very, very well. The symbol on this one, CRESY. I'm probably going to buy it tomorrow. Haven't made up my mind totally, but I do like it because it is a commodity play, and right now, at least right now, we're in a situation where we're going to see we're going to see a lot of prices go up in terms of wheat, beef, all the kinds of foodstuffs that you normally have. Ukraine used to produce a lot of that. They're not going to plant this year, and so Argentina will probably be a major producer of this. It already is. I think they're going to have a bumper crop this year, and they're going to have a price rise like you read about. And this is one of the ways that you can take advantage of that is with this stock that we just put out here. And the name of it, of course, is this, and I can't pronounce it, but the symbol is CRESY, and it's up 67% since the beginning of the year. So, kind of interesting stock there. Definitely one that you might want to focus in on that. Well, I will be back tomorrow at 5:00. Let's see if I get everything. Yeah. One last one. Let's take a look at Open and SoFi. Most of these tech stocks just aren't going to be doing that well. I'm not trying to, but let's look at Open. And I think that's going to be pretty bad. Let's see. Yeah, Open Door Technology. This stinks. I mean, no offense. Open Door Technology. This is a bad stock. This is a short. This is a potential short, by the way. It's only $8 though, so it's not really a great short. But this is a short candidate right now. So I would be looking possibly on this one. This is a short candidate. So you don't want to buy this one long. You don't want to buy this one long. So Open, you definitely want to avoid Open. It's not looking good as a stock, unfortunately. So if you got it, I would sell it. I really would, and hopefully live another day. SoFi is also it's a little better. But this area of the market is just being hammered. Yeah, this is also potentially a short candidate as well. SoFi Technology is $6.99. So this is getting worse, and it's probably going to go worse than that. We have the death cross on it right there. Yeah, let's get the death crosses on it right there. And let's kind of look from the monthly chart. Yeah, look at that. It's just straight down. So this is a short candidate. This is basically a short candidate as well. SoFi Technologies, and believe me, companies can go out of business. I mean, people think that no, they never go out of business. Believe me, they can. So one last one, ATER, I'm sorry, ER. Excuse me. That get this right. Altrian. Let's look at the daily on Altrian. Yeah, another very, very poor chart here. Just a bad chart all the way around. That's a bad chart. I would not buy that. Stay away. And this is a $4 stock, but there's plenty of $4 stocks that we can buy in the other areas that are so much better, so much better than this. I mean, just if you just compare it to some of the other ones, I mean, there's just Again, this one I just want to show you, CRESY. Let's look at that one. And instead of buying the text, you need to be you're in the wrong you're in the wrong part of the market. I mean that's just the long and short of it. This is a very cheap stock, $9.66 here, and not that you should be buying cheap stocks, but this one is doing far better than SoFi or any of the techs. And again, this is in the property REITs, but it's in the agricultural area, which makes it very good. So I'd be very, very careful about about that. And I will try to do, if you tune in tomorrow, I'll probably give you try to give you some insight on Tesla. I'm really staying out of Tesla until it moves above about 1150. There seems to be a trading range from about 1,000 up to about 1150. If you get above that and hold it, then I think we might be able to do it. More in bottom, chances of a breakout. Right now the market mojo has moved away from the sector, so very tough to predict on that. But I will be back tomorrow and hopefully some predictions on Tesla. If you're not already a member of the Action Trailers, just go to www.Dallas Trading Floor and first and last name and email address, and we'll get you all set up. I give some special insight that way. Also, we have a Discord room, which is great too. That's for the first 2 hours of trading every day on the market. So that's kind of where we're getting in, what's hot and what's moving. So I will be back tomorrow at 5 o'clock Central Time. Please like the show. By liking the show, it helps us a lot, gets us out there to a lot of people. We have over 100,000 people that actually have liked this so far on the various platforms. We really like to have more of obviously. So definitely go and like that. And we will see you back here tomorrow at 5. And happy trading.